In this video, I'll be explaining to you the price to book ratio and how you can use it when investing even if you're a beginner in the stock market. In addition, I'll be sharing with you how to calculate the price to book ratio and more importantly, show you real life examples of how you can use the price to book ratio in the stock market. If that interests you, stick around in this video. Okay, let's dive right into the price to book ratio. What is a price to book ratio? So a price to book ratio measures the price of a company relative to its book value. There are two things to take note in this sentence. The first is the price of a company. So the price of a company refers to the current stock price. And the second one is the book value. So you might be wondering, what is a book value? Finding the book value of a company is kind of similar to finding the net worth of an individual. So in this example, say the individual name is Tom. Right, so how do we find the net worth of Tom? The first thing that we want to do is we want to add up everything that he owns. So if Tom owns a car, a house, and some cash, we add up all of those together. And the next thing that we want to do is we want to subtract any liabilities or debt that he has. So we will subtract the debt that he has. So taking everything that Tom owns, so the car, the house, and the cash, minus the liabilities that he has, so in this case it's the debt that he has, we will arrive at the net worth of Tom. And this is kind of similar to how we calculate the book value of a company. The book value of a company is basically finding the net asset value of a company. So in this case, we want to take the total assets of a company minus its intangible assets minus the total liabilities. And by using this formula, we will be able to derive the book value of a company. There are differing views on how to calculate the book value of a company. There are some people who calculate the book value of a company by taking the total assets minus the total liabilities of a company, while there are others who take the total assets minus the intangible assets minus the total liabilities. I personally use the latter. When calculating the book value of a company, I take the company's total assets minus its intangible assets minus its total liabilities. So in this video, I'll be using this formula to calculate the book value of a company. Just note there are different ways to calculate the book value of a company. Okay, now that we have the formula to calculate the book value of a company, the formula for the book value is the total assets of a company minus its intangible assets minus its total liabilities. Okay, let's use Amazon as an example and let's find Amazon's book value. So to find Amazon's total assets, intangible assets, and total liabilities, we have to use a financial website. And the financial website that I use is Reuters. The first thing to do is to search for Amazon. To do that, we click on this button here and we key in Amazon ticker symbol, which is AMZN. Okay, right, so we have Amazon here. Then we click on Amazon. Then we click Financials. And to find the assets and liabilities, we have to click on Balance Sheet. And that is where we'll find the assets, liabilities of Amazon. So if we scroll down, we'll see that the total assets for Amazon is 225,248. That is its total assets. So that is the total assets. The next thing we want to find is the intangible assets. So to find intangible assets, the intangible assets is here, right? So intangible assets include the intangible, so it's 4,049, and the goodwill. So goodwill is 14,754. So we add up those two to get the intangible assets. And the last thing that we want to find is the total liabilities of Amazon. So the total liabilities, we can also find it in the balance sheet of Amazon. We have the total liabilities here at 163,188. Right, so that is the total liabilities of Amazon. And now that we have all these numbers, we can just plug it into the formula to calculate Amazon's book value. So the formula will be the total assets minus the intangible assets. These two are the intangible assets. So the intangibles and the goodwill. And finally, we subtract the total liabilities. So the total liabilities is this amount. And we would derive at this number, 43,257. So Amazon's book value is 43,257. And take note that this value is in terms of millions. Why do I say that? So if we take a look at the balance sheet, they mention that all values are displayed in terms of millions and in terms of US dollar. So this number here is in terms of millions. So that is how we calculate the book value of a company. Now that we know how to calculate the book value, how do we calculate the price to book ratio? So the price to book ratio formula is taking the stock price of a company divided by the book value per share. Let's use Amazon as an example again. So the price to book ratio formula is the stock price divided by its book value per share. How do we calculate the book value per share? Basically, we take the book value of a company, which we have already derived earlier on, and we divide that number by the total shares outstanding. So how do we calculate the total shares outstanding? To do that, we have to use the financial website, and the website that I use is Finviz. Right, so the first thing that we want to do is to search for Amazon. So Amazon ticker symbol is AMZN. Okay, so now that we are on Amazon page, we can see that the total shares outstanding in this case is 498 million. Right, so we plug in the value. So we take the stock price, divide by the book value per share. So the book value is 43,257, which we have already derived earlier on, divided by the total shares outstanding, which is 498. Right, so take note that these numbers here are valued in terms of millions, so they cancel out. The next thing that we need to find out is the stock price of Amazon. So what is Amazon's current stock price? So Amazon current stock price is $2,680 as of the filming of this video. So we plug in Amazon's current stock price into the formula and we'll get this number here. And then we'll derive Amazon's price to book ratio. So Amazon's price to book ratio is 30.86. And that is how we calculate the price to book ratio of a company. So there are three main things to take note when calculating the price to book ratio. The first is the stock price of a company. The second is the book value of a company. And the third one is the total shares outstanding. Once we are able to find out all of these numbers, we can plug it into the formula to calculate the price to book ratio of the company. Okay, now that we learned how to calculate the price to book ratio, the next question that you might have is, what is a good price to book ratio? I do not believe that there is one fixed good price to book ratio. Rather, I believe that it really depends on the industry and sector. So what do I mean by it depends on the industry and sector? So if I'm taking a look at a company, I won't just take a look at that one company's price to book ratio. Rather, I'll take a look at that company's price to book ratio and compare it against its competitors' price to book ratio in the same industry and sector. However, if we really want to have a number to have a gauge on what is a good price to book ratio, many investors believe that a good price to book ratio is something that is less than 1.5. However, this number is not a be-all, end-all kind of number. It just provides us a rough estimate of what to look out for. What I will do is I will compare the price to book ratio of the company that I'm taking a look at against its competitors in the same industry and sector. So let me show you an example of what I mean. Using the same example as I used earlier on in the video, let's take a look at Amazon. So Amazon's price to book ratio in this case is 20.45. So this number differs from what we have calculated earlier on in the video. So remember that in the earlier part of the video, I mentioned there are different ways to calculate the book value of a company. So one of the ways is to take the total assets minus the intangible assets minus its total liabilities of the company. So that is how I calculate the book value of a company. However, for Finviz used another formula to calculate the book value of a company. In this case, Finviz used the formula which is total assets minus the total liabilities to find the book value of Amazon, and that is why they arrive at a different number. Let's just use this number as an example. So the price to book value of Amazon is 20.45. In this case, 20.45 is a very high number if we compare it to the rough estimate that I have given you earlier on. So does this mean that Amazon has a poor price to book value? The way that I'll do to determine whether the price to book ratio of Amazon is good or bad is by comparing it against its competitors in the same industry and sector. Amazon is in the consumer cyclical sector and the internet retail industry. So what I would do is I want to compare Amazon against companies in the consumer cyclical sector and internet retail industry. Let me walk you through the process of how I compare the price to book ratio of Amazon against its competitors in the same sector and industry. The first thing that I'll do is go to Finviz homepage. So this is Finviz homepage, and then I'll click on Screener. And I'll take a look at the sector and the industry. So Amazon is in the consumer cyclical sector and in the internet retail industry. So we have the internet retail industry. All these companies that you are seeing on this page here are in the consumer cyclical sector and the internet retail industry. These are Amazon's direct competitors. We see some familiar names coming up. So we have Alibaba, we have eBay, we have Etsy, and we have JD.com. So these are some of Amazon's direct competitors. Let's take a look at eBay. Okay, so can you see that eBay has also quite a high price to book ratio? So its price to book ratio, while lower than Amazon at 18.26, it's still quite a high number. Let's take a look at Etsy. So you can see that Etsy's price to book ratio is 29.91. So that is even higher than Amazon. What this means for Amazon is that even though its price to book value by its absolute number is high at 20.45, however, if we compare it to its competitors in the same sector and industry, Amazon's price to book ratio compares favorably against its direct competitors. And that is why I do not believe that there is one absolute number that determines a good price to book ratio. Instead, I believe that a good price to book ratio is when the price to book ratio of a company compares favorably against its competitors in the same industry and sector. That is how I use the price to book ratio when investing in the stock market. Hopefully you guys have learned something from this video. If you did, smash that like button because it will really help the channel grow. And make sure you subscribe to my channel so that you don't miss out on this investing, trading and stock market videos that I release each week. To your financial success.